Opening hook 000 to 030. You received your old age security payment last month, and everything looked normal. But then you filed your tax return, and a few months later, you noticed something strange. Your OAS deposit dropped, maybe by $50, maybe by $200, or in some cases, it disappeared completely. You checked your bank statement twice. You called your spouse over to look at it, and you asked yourself, what did I do wrong? The answer isn't that you did anything wrong. The answer is that your income crossed a line the government set years ago, and that line triggers something called the OAS Clawback, and in 2026, that line sits at $93,454. If you're anywhere near that number, or if you've never heard of this rule before, this video will explain exactly how it works, why it exists, and what you need to do to protect your retirement income. Context and why this matters. 030 to 3. Let me start by being very clear about what we're talking about today. Old age security is a monthly payment from the Government of Canada that most Canadians receive starting at age 65. It's not based on how much you worked or how much you contributed. It's based on how long you lived in Canada as an adult. If you lived here for 40 years after turning 18, you get the full amount. If you lived here for less, you get a partial amount. Right now, in early 2026, the maximum OAS payment is around $718 per month if you're between 65 and 74. If you're 75 or older, it's higher, around $790 per month, because the government increased it by 10% for that age group starting in 2022. But here's the critical part. Old age security is income tested. That means if you earn too much money in a given year, the government takes some of it back, or all of it back, depending on how high your income goes. This process is officially called the OAS recovery tax, but almost everyone calls it the OAS Clawback, and it's one of the most misunderstood rules in the Canadian retirement system. The reason so many people are confused is because the clawback doesn't happen right away. It happens with a delay. The income you report on your 2025 tax return will affect your OAS payments from July 2026 to June 2027. So by the time you see your payment drop, you've already forgotten what your income was a year and a half ago, and that delay causes panic. People think Service Canada made a mistake. They think their account was hacked. They think someone reported them for something. But in most cases, it's just the clawback doing exactly what it was designed to do. So let me walk you through how this system works, step by step, so you can see it coming and plan for it properly. Official Rule Explanation 3 Yabur to 8 Satoy. The OAS Clawback Rule is found in the Income Tax Act of Canada, and it's administered by the Canada Revenue Agency. Service Canada pays your OAS, but the CRA is the agency that calculates whether you owe money back. Here's how it works. Every year, you file a tax return. On that return, there's a number called your net world income. That's the income you report online, 23,600 of your tax return. It includes almost everything: employment income, pension income, CPP, rental income, investment income, foreign income, RRSP withdrawals, and more. It does not include GIS, the Guaranteed Income Supplement, and it does not include most gifts or inheritances, because those aren't considered income. Once the CRA processes your tax return, they look at that line 23,600 number. If it's above a certain threshold, they calculate how much OAS you have to pay back. For the 2026 payment year, which runs from July 2026 to June 2027, That threshold is projected to be $93,454. I say projected because the government hasn't released the final index number yet, but based on inflation adjustments and the pattern from previous years, that's the number we're expecting. If your net world income on your 2025 tax return is above that threshold, you enter the clawback zone. The clawback rate is 15%. That means for every dollar you earn above the threshold, the government takes back 15 cents of your OAS. Let me say that again, because it's important. For every dollar above $93,454, you lose 15 cents of OAS per year. Now there's also a second threshold. If your income goes high enough, your OAS gets clawed back completely. That upper threshold for 2026 is expected to be around $153,000. If your income hits that level, you receive 0 OAS. Both of these numbers are indexed to inflation every year, so they go up slightly each year, but not by much. In 2025, the lower threshold was $90,997. In 2024, it was $86,912. You can see the pattern. It creeps up slowly. Now here's the part that confuses people the most: the timing. When you file your 2025 tax return in the spring of 2026, the CRA reviews your income. Then, starting in July 2026, they adjust your OAS payments to reflect that income. Those adjusted payments continue until June 2027. Then the cycle repeats. Your 2026 tax return, filed in spring 2027, will determine your OAS payments from July 2027 to June 2028. So there's always this 18-month lag between earning the income and seeing the effect on your pension. And here's another detail. If you owe a clawback, the CRA doesn't send you a bill. They just reduce your monthly OAS payment automatically. So instead of receiving $718, you might receive $650, or $500, or nothing, depending on how much you owe. That automatic deduction is what shocks people. They open their bank app, see a lower number, and don't understand why. Real-life examples. 8 aira 6 crowns to 12. Let me give you 2 examples so you can see how this plays out in real life. Example 1. Margaret. Margaret is 67 years old. She lives in Ontario. She receives the maximum OAS payment, which is $718 per month, or $8,616 per year. In 2025, Margaret's total income was $98,000. That income came from her CPP, which pays her $14,000 per year, a small workplace pension that pays $24,000 per year, RRIF withdrawals of $30,000, and investment income of $30,000. Her net world income online 23,600 of her tax return is $98,000. The clawback threshold for 2026 is $93,454. Margaret is $4,546 above that line. So the clawback applies. The government takes back 15% of that excess. 15% of $4,546 is $682. That means Margaret will lose $682 of OAS over the 12-month period from July 2026 to June 2027. Divide that by 12 months and Margaret's monthly OAS payment will drop by about $57 per month. Instead of receiving $718, she'll receive $661. Now, Margaret didn't do anything wrong. She didn't hide income. She didn't lie on her taxes. She just earned a bit more than the threshold, and the rule kicked in automatically. When Margaret sees that $57 drop in July, she might panic. She might call Service Canada and wait on hold for 2 hours. But the agent will tell her exactly what I just told you. It's the clawback, and it's based on her 2025 income. Example 2. Robert. Robert is 72. He lives in British Columbia. He also receives the maximum OAS, $718 per month. In 2025, Robert sold a rental property. After paying off the mortgage and covering the legal fees, he had a capital gain of $100,000. Half of that capital gain, $50,000, is taxable and gets added to his income. Robert also has CPP of $15,000, a pension of $20,000, and RF income of $30,000. His total net world income for 2025 is $115,000. That puts him $21,546 above the threshold. 15% of that excess is $3,232. But here's the problem. Robert only receives $8,616 per year in OAS. The clawback of $3,232 is more than a third of his total benefit. So starting in July 2026, Robert's OAS payment will drop by $269 per month. Instead of $718, he'll receive $449. That's a massive drop, and Robert won't see it coming unless he understands the clawback rule. Now, the important thing to understand is that this is a one-time hit. Robert's income in 2026 will likely be much lower because he's not selling another property, so his OAS will recover the following year. But for that 12-month period from July 2026 to June 2027, he's going to feel the impact. These two examples show you how the clawback works in practice. It's not a punishment, it's not a mistake, it's a rule that's been in place since 1989, designed to reduce OAS payments for higher income retirees. What to check, what to do. 12 weeks to 16. So what should you do if you think the clawback might affect you? First, check your 2025 tax return. Look at line 23600. That's your net world income. If it's above $93,454, you're in the clawback zone. If it's below that, you have nothing to worry about. If you haven't filed your 2025 return yet, you can estimate your income by adding up all your income sources: CPP, OAS, pensions, RRSP, or RRIF withdrawals, rental income, investment income, employment income, and any capital gains. Don't forget to include foreign income if you have any. Second, log in to your My Service Canada account. Once the CRA processes your tax return and calculates your clawback, Service Canada will update your OAS payment amount. You can see that update in your online account under the View Latest Claim section. If your payment amount has changed, the system will show you the new monthly amount and explain why it changed. It will say something like, OAS recovery tax applied based on 2025 income. You can also view your payment history to see exactly when the change took effect. Third, read any letters from Service Canada. If your OAS is being reduced due to the clawback, Service Canada will send you a letter explaining the change. That letter will show your old payment amount, your new payment amount, and the reason for the change. Keep that letter. If you ever need to call Service Canada or speak with a tax professional, that letter is your proof of what happened. Fourth, check your CRA Notice of Assessment. When you file your tax return, the CRA sends you a Notice of Assessment. On that notice, there's a section that shows whether you owe an OAS recovery tax. If you do, it will show the amount. That amount gets deducted from your OAS payments over the following 12 months. The CRA doesn't send you a bill. They just tell Service Canada to reduce your monthly deposit. Fifth, know when to call Service Canada. You should call if your OAS dropped and you can't see any explanation in your online account. Your income was well below the threshold and you still lost a OAS. You believe the CRA made an error on your tax return. You didn't file a tax return and your OAS stopped completely. Do not call if your income was above the threshold and your OAS dropped by the expected amount. You're just checking to see if the clawback applies. You can check that yourself online. You're calling to complain about the rule. Service Canada agents can't change the rule. The call center wait times can be long, especially in the summer when OAS recalculations happen. So only call if there's a real problem that you can't solve by checking your online account or reading your letters. Sixth, plan ahead. If you know your income is going to be high in a given year, you can plan for the clawback. You can't avoid it if your income is above the threshold, but you can mentally prepare for the drop in payments. Some people choose to withdraw less from their RRFs in high-income years. Some people delay the sale of rental properties or investments until a year when their income is lower. Some people split pension income with their spouse to keep both incomes below the threshold. These are all legitimate strategies, but they require planning. You can't undo the clawback after the fact. Once you've filed your tax return and reported the income, the rule applies automatically. Common mistakes and warnings, 16 OAS to 1930. Now let me talk about the most common mistakes seniors make with the OAS clawback. Mistake 1. Not filing a tax return. Some seniors think that if they don't file a tax return, the government won't know their income and won't apply the clawback. That's completely wrong. If you don't file a tax return, the CRA assumes you're not eligible for OAS, and Service Canada will stop your payments entirely. You must file a tax return every year to continue receiving OAS, even if you have no taxable income. So never skip filing. Even if you think it's pointless, file the return. It's the only way to keep your OAS flowing. Mistake 2. Forgetting about one-time income. A lot of seniors get hit by the clawback because they forgot about a large, one-time income event. Maybe they cashed out an RRSP. Maybe they sold a cottage. Maybe they received a severance payment or a bonus. Maybe they withdrew money from a TFSA and mistakenly reported it as income, which you shouldn't do because TFSA withdrawals aren't taxable. These one-time events can push you over the threshold even if your regular income is below it. So always keep track of any large deposits or withdrawals during the year. Mistake 3. Assuming the clawback is permanent. Some people see their OAS drop and think it's gone forever. That's not true. The clawback is recalculated every year based on your most recent tax return. If your income goes back down the next year, your OAS payment will recover. It's not a permanent reduction unless your income stays permanently high. Mistake 4. Not splitting pension income. If you're married or in a common law relationship, you can split up to 50% of your eligible pension income with your spouse for tax purposes. This is called pension income splitting, and it's allowed under the Income Tax Act. If one spouse has a high income and the other has a low income, splitting can bring the high earner below the OAS clawback threshold. It can also reduce overall taxes, but a lot of couples don't know this option exists or they forget to use it. If you're close to the threshold, talk to an accountant about pension splitting. Mistake 5. Confusing OAS with CPP. OAS is income tested. CPP is not. Your CPP payment is based on how much you contributed during your working years and when you started taking it. It doesn't matter how high your income is. Your CPP will not be clawed back. Only OAS gets clawed back. So if you see a drop in your bank deposit, check which payment changed. It might not be OAS at all. It could be a CPP adjustment for a different reason. Future impact, 1930 to 22, sir. So what happens next? If you're affected by the clawback in 2026, your reduced OAS payments will continue from July 2026 to June 2027. That's 12 months. Then, in the spring of 2027, you'll file your 2026 tax return. The CRA will review your 2026 income and recalculate your OAS for the period from July 2027 to June 2028. If your 2026 income is lower, your OAS will go back up. If it's higher, your OAS might drop even more. This cycle repeats every year for as long as you receive OAS. Now let's talk about indexing. The clawback thresholds are indexed to inflation using the Consumer Price Index. Every year, the government adjusts the thresholds upward to reflect the rising cost of living. In 2024, the lower threshold was $86,912. In 2025, it was $90,997. In 2026, it's expected to be $93,454. That's an increase of about $2,500 per year. So if your income is growing slower than inflation, you might find yourself further below the threshold over time. But if your income is growing faster than inflation, you might creep closer to the clawback zone. The other thing to watch is the July recalculation. Every July, Service Canada recalculates your OAS based on your most recent tax return. That's when the clawback hits. That's also when other changes happen, like index and increases or residency corrections. So if your OAS payment changes in July, don't panic. Check your My Service Canada account first. Read any letters from Service Canada. And if you're still confused, then call. July is the busiest month for Service Canada because everyone's payments get recalculated at once. So expect longer wait times if you call during that period. Calm summary, 22 Surah to 24. Let me summarize everything we've covered today. The OAS clawback is a rule that reduces your old age security payment if your income is too high. The threshold for 2026 is expected to be $93,454. If your net world income online $23,600 of your 2025 tax return is above that number, you'll lose 15 cents of OAS for every dollar above the threshold. The clawback happens automatically. You don't get a bill. Service Canada just reduces your monthly payment starting in July 2026, and those reduced payments continue until June 2027. The clawback is not permanent. It's recalculated every year based on your most recent income. If your income drops, your OAS recovers. You can check your clawback status by reviewing your tax return, logging into your My Service Canada account, and reading your Notice of Assessment from the CRA. You can plan ahead by managing your income, splitting pension income with your spouse, and timing large withdrawals or sales in low-income years. And most importantly, don't panic if you see your OAS drop in July. Check your records first, understand the reason, and only call Service Canada if there's a real error or if you can't find an explanation in your online account. The OAS clawback has been around since 1989. It affects hundreds of thousands of Canadian seniors every year. It's not new, It's not a mistake, and it's not going away. But if you understand how it works, you can plan for it and avoid the shock of seeing your payment suddenly drop. Engagement prompt, 24 Sauk to 25 Asas. Now I want to ask you a question. Have you ever been affected by the OAS Clawback? Did you see your payment drop 1 year and not understand why? Or are you worried that your income might push you over the threshold in the future? Leave a comment below and let me know. I read every comment, and I try to answer as many as I can. And if this video helped you understand the clawback rule, please hit the like button and subscribe to the channel. I make videos like this every week to help Canadian seniors navigate CPP, OAS, GSOS, and all the other retirement benefits that can be so confusing. The more people who understand these rules, the less stress and confusion we'll all have when those payments change. Thank you for watching. I'll see you in the next video.